Ever looked at a candlestick chart and wondered what those colorful bars really mean? It might seem complex at first, but let's break it down into bite-sized pieces. Imagine you're at a bakery and you see a row of beautifully crafted cakes. Each cake has its own icing color and shape, but they all serve a purpose: to show what's inside. Candlesticks are much like those cakes, providing a snapshot of price movement over a specific time period, whether it's minutes, hours, or days. Each candlestick tells you 4 key pieces of information: the opening price, the closing price, the highest price, and the lowest price for that time frame. Picture it like this. The body of the candlestick is the cake itself. It shows the opening and closing prices. If the closing price is higher than the opening price, the body is often colored green or white, indicating a gain. If the closing price is lower, it's red or black, signifying a loss. Now, here's where it gets interesting. The wicks or shadows sticking out from the top and bottom of the candlestick are like the decorations on the cake. They represent the highest and lowest prices reached during that time. So a long wick above the body shows that the price spiked high before closing lower, while a long wick below indicates a drop before the price rebounded. Understanding these elements helps you see the market's emotions, buyers and sellers battling it out. So next time you glance at a candlestick chart, remember, each candlestick is a story of price action, revealing the market's mood, like a deliciously decorated cake reveals its flavors. What exactly does each candlestick tell us? Think of a candlestick as a mini report card for a specific time period in the market, whether that's 5 minutes, an hour, or a day. It neatly wraps up the price action into just one shape, and here's how it breaks down. First, there's the open price. This is the very first price at which a trade occurs during that time period. Imagine you're at a bakery, and the first customer of the day buys a loaf of bread. That initial price is your open. Next comes the close price, which is the last trade of that period. Think of it as the bakery closing for the day. The last loaf sold sets the final price. The distance between the open and close tells us whether the price has gone up or down. If the close is higher than the open, the candlestick is often filled in green or white, indicating buyers were in control. If it's lower, it's red or black, showing sellers had the upper hand. But there's more. Each candlestick also shows the high and low prices. Picture a roller coaster ride during our bakery day. The high is the highest price someone paid for a loaf, like reaching the peak of that roller coaster, while the low is the lowest it dropped to, like the thrilling dip. These extremes give you a sense of the volatility during that time. So, every candlestick isn't just a pretty shape. It's a compact narrative of market movement, giving traders insight into market sentiment. And here's the surprising part. By analyzing patterns of these candlesticks over time, traders can identify potential trends. Understanding the anatomy of a candlestick opens the door to unraveling market psychology. Stay curious, and let's dive deeper into how these shapes impact trading decisions. What do green and red candlesticks really tell us about market sentiment? A green candlestick indicates that the price closed higher than it opened. Think of it as a little celebration among traders, a sign of optimism. When you see that green, it's like a crowd cheering because they believe the asset is gaining value. Now, let's break it down. Imagine you're at a bakery. You walk in, and the price of your favorite pastry is $2. You leave the bakery with that pastry, and later, you find out the price has gone up to $2.50. The increase reflects a positive change, right? That's essentially what happens with a green candlestick. It shows that buyers are more aggressive, pushing the price up. On the flip side, a red candlestick tells a different story. It reveals that the price closed lower than it opened, like a warning sign. Picture this. You walk into the same bakery, and the pastry you bought for $2 is now only $1.50. You can imagine how disappointed you'd feel. That's the vibe of a red candlestick. It signals caution or pessimism among traders. It suggests sellers are in control, and the market sentiment is leaning towards a decline. Here's the surprising part. The color of the candlestick alone doesn't give the complete picture. You also need to consider the length of the candlestick's body and its wicks. A long green body indicates strong buying pressure, while a long red body shows significant selling pressure. Understanding these nuances can help you gauge market sentiment more accurately. So, next time you look at a candlestick chart, remember, those colors are more than just pretty visuals. They tell a story about how traders feel. Curious for more insights? Stay tuned. Have you ever wondered how a single candlestick can represent so much more than just one moment in time? It might seem simple, but the time frame a candlestick covers plays a huge role in what it actually reveals about market sentiment. Think of it this way. A candlestick can be like a snapshot or a whole album of memories. When you look at a candlestick on a chart, you're not just seeing a single price point. Instead, each candlestick can represent various time frames, from a mere minute to an entire day, or even longer periods like weeks or months. Just like a photo captures a fleeting moment, a 1-minute candlestick shows us what traders felt in that brief period. It might reveal a sudden spike in buying or selling, which can be thrilling or alarming, depending on the context. Now, here's the surprising part. If you zoom out and look at a daily candlestick instead, you're viewing a much broader emotional landscape. This candlestick summarizes all the market activity over 24 hours: opening price, closing price, highest and lowest prices. It's like flipping through an album of photos from a trip, capturing the ups and downs of the journey instead of just one snapshot. In this case, you get a better sense of the overall trend and sentiment of the market over time. So, the candlestick you're looking at tells a story, but understanding the time frame is crucial. A quick glance at a 1-minute candlestick might lead you to think things are volatile, while a daily candlestick could show a more stable trend. Recognizing this connection can help you interpret the market more accurately, giving a clearer picture of what traders are feeling at any point in time. Understanding the time frame of a candlestick is essential for grasping the larger narrative of the market. If you can remember that every candlestick tells a story based on its time frame, you'll have a much richer understanding of market dynamics. What if I told you that candlestick patterns are like the market's mood ring? Each color and shape tells a story about what's happening under the surface. Imagine you're at a party. If you see people laughing, chatting, and dancing, the atmosphere is clearly upbeat. Now, think about a series of green candles on a chart. Each green candle represents a time period where the price closed higher than it opened. A series of these green candles signals a bullish trend. It's like the market is throwing a celebration, indicating that buyers are in control and pushing prices up. But here's the surprising part. It's not just about whether the candles are green or red. The length and shape of the candles add layers to the story. A long green candle, for example, suggests strong buying pressure, while a short one might mean indecision. This is where it gets interesting. If you start seeing a sequence of short red candles after a long green one, it might indicate that the party is winding down. Sellers could be gaining strength, hinting at a potential reversal. Now consider those moments when you see a pattern like 3 consecutive red candles. This could signal a bearish trend, suggesting that sellers are taking charge, much like a sudden shift in the crowd, where people are moving towards the exit. Understanding these patterns helps you read the mood of the market. It's not just numbers, it's about the emotions and actions of traders coming together in a visual language. So, next time you look at a candlestick chart, remember, it's more than just lines. It's a dynamic conversation about what traders feel and anticipate. So, what have we learned about candlestick charts? At first glance, they might just seem like a collection of colorful bars. But dive a little deeper, and you'll find they reveal so much more. Each candlestick is like a mini story of price movement, showing us not only where a stock's price opened and closed, but also the high and low points within that time frame. Imagine you're at a market, and each candlestick represents a seller's booth. The open price is where the seller first displays their goods. The close price is where they walk away after a sale, and the high and low are the prices they entertain throughout the day. If the sellers are constantly raising their prices, that's a sign of bullish sentiment. They're confident in the value of what they are selling. Conversely, if they keep lowering prices, that tells us buyers are hesitant, reflecting a bearish sentiment. And here's the surprising part. Because candlestick charts also illustrate market psychology. They help traders anticipate potential future trends. A series of green candles could indicate momentum building, while a sudden red candlestick after a rally might signal caution. Understanding these signals can be your ally in making sense of market movements. So, when you look at a candlestick chart, remember it's not just about the colors and shapes. It's a dynamic interplay of price action and human emotion. This knowledge gives you a clearer lens through which to view market trends, empowering you to make informed observations rather than simply reacting to price changes. If you found this helpful and want to explore more about market mechanics, you know what to do. hit that subscribe button.